Hey everybody, Josh Denbo, consumer protection attorney. I know it's been a long time since I posted a video here, but gotta forgive me. There was a worldwide pandemic. Maybe you heard about it. Blew up my business, ruined a lot of people's lives. It was a very difficult time. And if you think it was a plandemic, just unfollow me and move the hell on. I don't want to hear from you. So I want to talk today about something. I'm still practicing law, still practicing consumer protection law, getting busy again, which is good and bad. I'd rather not be busy under this area of the law, which would mean that the hedge funds are not actually preying upon consumers, but they are. So it keeps me in shoes and not bored, but it causes a lot of immense human pain, and I'm tired of that. So look, there's a fraud going on involving Fannie and Freddie and the companies and the entities that they sell their loans to. So Fannie and Freddie, first of all, let me get it out. Fannie and Freddie are the good guys in this story, aside from you and me. They're the good people. They're the good folks. As I understand the history of Fannie and Freddie, as private companies prior to the Great Recession, their role was, their goal and their business model was to buy loans and keep people in performing loans by giving loss mitigation and modifications that made them affordable and made them work. And their modification guidelines still to this day are designed around the principle of benefiting the homeowner, the consumer. Because there are ways to make money as an investor in this business that include keeping people in their homes. There are. I guess it's just harder work. It's easier to cause pain than it is to promote happiness in our version of capitalism red in tooth and claw as it deals with home ownership. It's tough. It's tough times here. It's tough times. So anyway, Fannie and Freddie sell two types of loans, NPLs and RPLs. And I know conspiracy theorists love to use acronyms and explanations that are really complicated to confuse you and make you sound like they're really important, and to support these highfalutin claims like a nationwide fraud. This is a nationwide fraud, I think. And I'm going to explain everything so you can give me a call if this is happening to you. The NPLs are Fannie and Freddie's acronym for non-performing loans. Loans that went into default and never came out. The RPLs are re-performing loans, which are loans that went into default and then were repaired, fixed, and came out at default. So the non-performing loans are sold as whole loans in huge tranches of hundreds of millions of dollars worth of loans to hedge funds. In New Jersey, the main hedge fund is VRMTG. I don't know who owns VRMTG. But the RPLs, the re-performing loans, are not sold as whole loans. They're put into a trust called a REMIC, Fannie Mae Freddie Mac REMIC, REMIC. And they're put out for bid, and then hedge funds, I guess, or super rich people, or I don't know who. Those are dogs who are very upset by Fannie and Freddie too. But bid and take ownership of portions of the trusts, and thereby take over control, and then they service the loans to their own servicers. The point is this. Fannie and Freddie have public guidelines, and they publicize their guidelines. And they also publicize the fact that when they sell these loans, NPLs and RPLs, they sell only to buyers who are going to abide by the Fannie and Freddie guidelines, which is benefit to the homeowners. We don't have the contracts between the NPL buyers, like VRMTG and the other that's what they are, hedge funds that prey upon consumers, and the RPLs, or the re-performing loans. We do have the prospectus. We don't have the contract. We have the prospectus of the trust, and the trust abides by some of the guidelines, not all, and the different issues there that I use to defend. The NPLs are handled by these hedge funds, and they simply ignore Fannie Mae and Freddie Mac's public statements that every buyer must abide by Fannie and Freddie modification guidelines. People are losing their houses. I think people are being defrauded. I do not have a copy of the contract between Fannie and Freddie and the NPL buyers, but Fannie and Freddie have publicly said, these are our guidelines, they have to be followed. This is baked into our contracts. Their public statement is, if you're going to buy from us, you're going to abide by this. I think that there is a next to 0% chance that the Fannie Freddie contracts do not include language that require the NPL buyers to abide by the loss mitigation guidelines. Instead, these hedge funds are throwing people out of their homes by refusing modifications or giving 8% flat rate loans, doubling their payments when people took out loans in, 8 years ago when the interest rates were 2%. That's a lot of money to be made, both in owning massive numbers of homes to rent them and for collecting payment on it at 8% on a huge amount of money when the market rate on these mortgages is a lot less than that. All right, look, I said this once, I've said it a million times. If you're working with an attorney who doesn't sue banks, but defends foreclosure or pretends to, you're working with the wrong lawyer. You've got to work with people who sue banks, who've got the ability to stand up and fight back and sue banks and sue mortgage servicers and sue investors and understand the industry. So if you're working with a paper pusher, you're going to get pushing of paper. They're going to come back and say to you, oh, you know what, we couldn't get you a mod, or here's your 8% mod. You ought to be grateful for it. Can't afford it, go into default, lose your house. You have to fight if you have a claim. Not everybody has a claim, but your lawyer has to be a person who fights instead of just negotiates. All right, you heard it before. I'm back. You're going to hear more from me. I'm fired up, and I have a lot to say about some of these predatory commercial loans too. All right? More soon.